Hello, traders. It's Wednesday, the 26th of December, 2018, the day after Christmas. Thanks for joining me today. Hopefully, you had a wonderful Christmas holiday if you observe it, or some rest if you don't. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the sentiment overall in the session, the extended session so far, is mixed. Crude oil's higher, up 1.9% or 80 cents, trading at 43.34 on the February contract. The Nasdaq's up 65.75 or 1.12% for a little bounce. The S&P is up 17 points, also bouncing. The laggard this morning, Euro stocks, but I think they are on. Let me see. Yeah, they're on holiday, I think. Yep. The DAX and the Euro stocks are off. Um, the cable is the laggard this morning, 0.28% down 36 pips, and the treasuries are off. So it seems like it's more on a risk on basis, but this has been quite a brutal market for investors. I mean, we are off about 20% or so. I didn't calculate it to Monday's low. I actually did not finish my homework this morning, so I want to get off as quickly as possible. Did not do the stock zones this morning. Took me an incredibly long time to go through the dailies, go through the market profiles, find all the singles, find all the excess highs, excess lows, the weak highs, weak lows, and the structure that goes back now to late 2016 through the beginning of 2017 below us. So it's just a lot of material to go through, a lot of replay to watch. So I'm not done doing my homework this morning, so I'm going to take it very, very easy and see see what the market yields. But those of you who are waiting, especially those of you who are um, at Convergent Trading and are waiting for stock zones and wondering why your charts didn't update with those zones, just know that the stock zones in this region here in the 2300 handle have not been done yet, and they will be done hopefully before the open or just shortly after. I'm not trading until they are done. Um, in terms of what we have today with regards to economic releases and so forth, there's really nothing on the calendar. Today, the market's going to be moving uh, under its own power. There are some that there's I think we already got Red Book retail sales and things like that, but there's nothing really big coming out today. This week I'll be here today, tomorrow, Friday. I'm trading mostly very short sessions. Everything gets back to normal next Wednesday. So that's what I've got. There's no review segment today. No review segment today because the last update I did, the last trader bite I did was on Thursday last week, the 20th. I was traveling Friday and I returned yesterday evening, and that's why I'm not so incredibly prepared. Again, if you're not prepared or if you're on edge, it's best not to trade. You don't have to trade. And what we're seeing is really um, historical type moves, very, very big moves, and you don't have to sit here and beat yourself up for it. I kind of do that to myself. And then I'm sitting here going, man, we've dropped like 400 points, and I really didn't crush this. But it's rare. It's rare that the market does this, and it's better for me to trade my strength, which is the intraday structure, than to sit here and try to be a swing trader or an all-day, short holder or whatever you need to be to make money in this. So, you know, this is more of a trend down type market. Trends are not my friend. Um, I'm not a momentum or swing trader. I'm not a breakout trader. So it hasn't been so fantastic. But the good news is, whatever the percentage is, 90% of the time, 95, 99% of the time, the market behaves as expected. And these are very, very interesting and rare moves that we're seeing here. Not making excuses, but we have to remember as traders what we're good at. I don't show up. I don't show up to a gunfight with a knife, and I'm very, very good with a knife. Um, so that's where we are. So if you're sitting here going, "Oh my God, look at these moves! I could have taken 600 points out of this." Please don't do that. What that's going to do is it's likely to make you adjust your risk parameters beyond the capacity of your account equity, beyond your risk tolerance. It'll make you abandon your trading plan in that you can now free flow, you can freestyle trade, which is like one of my traders used to say that all the time. I was trying to freestyle. No, there is no freestyle in trading. You either adjust your plan, figure it out, and trade this new plan, and spend a lot of time vetting it out and trade it, or you just sit and wait for whatever setups you have and trade your strength. Always trade from your strength. Don't try to be the master of all trades and the jack of none. So that's where I stand with this. As far as what I'm expecting for today, let's just jump right to that. So let me see if the fundies. So here's the bigger picture. Nope, that's not the bigger picture. Here's the bigger picture. So in the futures, in the current, adjusted for the current contract, the all-time high is 26 at 29.50. I believe it's 29.41 in the SPX. We pulled down into October, consolidated for about 2 months. This is a 2-month period here, starting the 11th of October to the 14th of December. We fell out of balance, and then we've run quite a bit, 2,600 to about 2350 over the last week and a half or so, or week really, week and a day, something like that. And you can see we've had quite a run down to where we are. Where are we in terms of price? We are just kind of brand this image or just capture this image in your head of these bars, right? Popping up above 2,500 and stop at the low, stopping above 2,400, popping up above 2,400 at the low, stopping below 2,350. Now let's go back in time and look at what we were doing when we were last here. So we have to go way back. Now so we're trading 2360 and boom, this is where we are currently. Back in the beginning, the first quarter of 2017, we're trading the first quarter of 2017. Each one of these bars still represents one entire day of the pit session, okay? So you can see the huge difference in range. Each one of those bars represents one pit session. Each one of these bars, back when we were trading here in balance, represents an entire pit session. You can see that we're running through an entire month in a day, back in the area where we last auctioned. So these days here, back in March, April of 2017, are the template days, and because the higher time frame is in control of the auction, as witnessed by the huge movement and the huge volume, we have to look at composites. We have to look at these micro comps to figure out where the heck we are. So we took out the micro comp for this period here, this micro comp here. from the 21st of March to the 21st of April. We took out the MCV POC. We have a small trend from February 8th till February 24th, 2017. And then below that, we have this other composite, which brings us into 2270, 2278 is the MC point of control, and that's the next big magnet below. So in this area here, again, it's kind of weird that I'm talking about 2017, February of 2017, but in this little trend here, what has happened, and let me expand this a little bit. What has happened is, so this is how it would normally look, this chart. What has happened is all of this was really low volume. I mean, this was a low volume trend. This is a very typical trend type move. Change the color of my pen. Let's go to yellow. So very thin area right here, and that is basically where we ended up, just below where we ended up on Monday. Right beneath us, the point I'm making is right beneath us, there's just an air pocket until we reach into 2310, into the next area. And then once we reach into the next area, we've come out of a low volume node, a low volume zone really, and then this becomes the key target. This 2778 and a quarter becomes a key target below from an auction perspective. That is the last big that's the last big balance zone in this area. If we take that out, look at what happens beneath it. If we take that out, now we're starting to move below the high volume node, somewhere in here at about 2250 or so is another air pocket right here. See that very, very low volume node right under there. If you recall, I recall this period here in early 2017, big trend days, consolidate, big trend days, consolidate, big trend days. Remember, this is right after the U.S. election. Do you all recall what it was like after the U.S. election? The market thought that deregulation, smaller government, drain the swamp, all that good stuff. Most importantly, um, the market had a whiff of a tax break, and so they were pricing that in. So we have big time breakouts. So 2278 is right beneath us. 2778. Oh, I'm sorry, 2278. The number's right in front of you, right there. POC is 2278. So underneath that is an air pocket, and then we start to push into the 2160s. Now, I know that that's like 200 points away, and it may be done, in terms of selling and stuff, but I have to look at the big picture and look at the composite picture, and that's the composite picture. So you can see it here in the composite that we fall off, and then we have this high volume node, and then we fall off again. We fall off again right beneath this 2250 if we continue selling. Now the strong potential here for today is we're likely to stay inside of Monday's range, and we're likely to see a bounce. We're likely to see a bounce here because on traditional measures, OTF type measures, the market is severely oversold. In the overnight session, go away. In the overnight session, so we open up, we sell off, put in an excess low. There's an excess low here between 23.25 and below. 23.25 will be the over-underline for me if the market turns over and starts to move lower. 23.25. If we breach 23.25, we're likely to see it accelerate to the downside into that 22.78 area. But Last night we put in an excess low, very clean, clear excess low, pulled back to it, retested, same price, double bottom right here, same price, and then we started to take off. And it looks quite bullish to me, at least at to start with. Now, those are fighting words, bullish in this environment, but that's how it's shaping up. It's moving back. We have a responsive market. It's moving back towards the balance of the prior day. Point of control is 2380, very, very sharp point of control. In other words, it just protrudes out as opposed to builds out, and it's likely to move towards 2395, 2400 is what I'm looking for today. That gives us about 30 points of range, which is much, much lower than what we've had. Okay, a reversal is likely to be sold. However, uh, there's also a big a big piling of shorts in here. A reversal can move very quickly through higher prices. You can see it here in a volume scope. See this volume scope here? This breakout from 8 o'clock just now without a 10 tick reversal so far. It's moving very quickly through these prices. Right? We've had our first selling pattern right there. But it's kind of pushing through on the buy side very, very quickly. All right, so what are we looking for today? Battling it out here, 100 lots in the ES. Primary scenario for today, and this has not been fully vetted out. I did not finish doing my homework, but given where we are, I expect an open auction on the open. I expect us to attempt to push lower. I expect an impulse up to bring us back to 2380, and for the market to attempt to push higher, where it's likely to be sold in this 2390 area. I don't expect us above 2400 today. I'm looking for it to then revert back and finish somewhere in the middle. I expect it to be a resting day today. A lot of people are not back from their break. Europe's out and so on. So that's the key. That's the responsive plan. The other plan is the secondary plan is an open that pushes up, impulses down, consolidates, and then starts to move towards closing touching the close of the prior day, moves into the overnight point of control, and then starts to test that low. Starts to test that low before we get a bounce into the close. So in either case, you have to wait for your setups. Don't go crazy with the volatility. It's easy to lose your account and to get emotionally invested in your trades in this environment. Be careful. This is a good time for you to really stick to your plan and just trade what you see as a setup. Unfortunately, even for me, setups are not really setups. We have to expand our ranges and expand our views a lot more. There is no such thing as a level in this kind of market. They're all just zones that got a lot bigger, right? 2.5, 3 times as big. The zones in which we execute, which means that stops need to be 2.5 times as big and targets need to be 2.5 times as big. And so for smaller accounts, that is very, very difficult to do on a product that has a notional value of 100 and whatever it is, $15,000 per contract. It's brutal to do that on a small account. Just be smart. Good luck today, and I'll catch you tomorrow. Take care.